Welcome to the US Eagle Find Your Balance podcast, where we talk about all things financial wellness. We're diving deep into understanding credit with a special multi-part series. I'm your host, Alicia, and today we're joined by Sunny from our Santa Ana branch, who will help us break down credit scores, why they matter, and how they impact loan approvals. So first of all, thank you so much for being here, Sunny.
Thank you so much for having me. I'm excited to get started.
Great. So let's dive in. First, I want to kind of talk about the basics of credit scores. So Sunny, what exactly is a credit score?
Yeah, so a credit score is basically like your financial reputation. It's a 3-digit number that tells lenders how trustworthy you are when it comes to borrowing money and paying it back. Basically, the higher your score, the better chances of getting approved for loans, credit cards, and even things like renting an apartment or setting up utilities.
Okay. How is your credit score calculated?
So there are 5 key factors that determine your credit score. The first one being payment history. This is the biggest one. So basically, you pay your bills on time, it helps your score. And if you miss any payments, it can actually drop your score pretty quickly. So the second factor is credit utilization. This is basically how much of your credit that you're using. Keeping it under 30% is good, but under 10% is even better. So the third one is credit history length, and that's basically the longer you've had your credit, the better. Number 4 is credit mix. So having different types of credit, like a credit card or an auto loan or a mortgage, can help build your credit score. The last one, number 5, is new credit inquiries. So applying for too much new credit at once can actually lower your score temporarily.
And you say temporarily, so does it improve again after you've applied to different things?
After time, those credit inquiries will eventually fall off your credit score.
So can you explain a little bit more about that? Does that mean my credit score starts whenever I open up a credit card at 18? Or what does that mean? What does the length mean?
So yeah, the length of your credit actually does start once you start opening accounts and start making your payments. That will be included in the length of your credit. So the longer you have accounts open that are good standing, that you're making payments on time, then your credit will actually raise due to.
Okay, perfect. What is considered a good credit score?
Yeah. So a good credit score is typically about 700 or higher. Anything 750 and above is considered excellent and will actually help you get the best interest rates.
Okay. Do you have any tips for someone who, say, might not have a great credit score? Do you have any tips on how they can improve their credit score?
The best way to build and maintain a strong credit score is through smart habits. A few things to focus on is making your payments on time. Even the minimum payment is better than paying nothing at all. Keep your balances low. Try not to max out your credit cards. Start small. Even if you're new to credit, consider a secured credit card or even becoming an authorized user on somebody else's account to help start building that credit for you. And I would also say to be careful with new applications because, as we had already discussed, too many hard inquiries in a short time can lower your score.
And so how can people protect their credit and maybe avoid mistakes that could hurt their score?
I think that the number one way is to stay informed. The more you understand your credit, the better choices you'll make. Be patient. Credit takes time to build, but small, smart choices do add up. And, don't be afraid to ask for help, whether it's checking your score, understanding your options, or rebuilding your credit. We're here to help at US Eagle.
And so let's kind of go back a little bit and talk about how credit affects approvals and rates. So Sunny, how does a credit score impact the ability to, say, get approved for loans or credit cards?
Right. So credit definitely does affect interest rates. Basically, the better your score, the lower your rate, which saves you money over time. If you have a lower score, you might still get approved, but you'll probably have a higher interest rate, which means that you'll be paying more in the long run.
Are there any common misconceptions that you see that people have about their credit score or just credit scores in general?
There's actually a few misconceptions that people have. One is checking my own credit score lowers it. It actually doesn't. You can check your score anytime without it affecting anything. One way to check your score, if you're a member with US Eagle, is to use our online banking and our mobile app, and we provide your credit scores there for you. Common misconception would be that carrying a balance helps my credit. Actually, paying your balance off in full each month is best practice. Another misconception that I have heard is I need to go into debt to build credit. And this is just not true. Just using credit responsibly, even in small amounts, builds a strong history.
Okay. And so I know that US Eagle has some great options for people wanting to build their credit, or maybe their credit hasn't been great and they want to, up their score a little bit. Can you talk about maybe some ways that US Eagle specifically can help them?
Absolutely. US Eagle actually offers what's called a secured credit building credit card option. And it's basically you pay up front and you set your limit with how much that you are paying up front, and you are not able to spend over the limit that you set for yourself. So every time you use the card and you make your payments, it's building your credit and it's protecting you from going over any limits that you might have.
So, Sunny, just to wrap up, are there any final things, any final advice that you have for listeners about managing their credit wisely?
Yeah, actually, no matter where you are in your credit journey, there's always something that you can do to improve, whether it's being an authorized user or opening a secured credit card. The best part is that once you build good credit, it makes a huge difference. It makes a huge difference in your financial future.
Okay. Well, thank you so much for being here, Sunny. I've really liked talking to you and getting to learn more about credit. So for all of the listeners, we are going to have a multi-part series for this. So stay tuned for future episodes of the Find Your Balance podcast. We'll see you next time. Bye.
Thank you.